Hello, 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 good morning, hello. How you doing, everybody? To be fair, this is a back testing day, so you're going through a back testing session. Um, I've done a lot of back testing already, but I decided to record. Now, I didn't do any voiceover, so this is me doing a voiceover while I'm recording. You feel me? So I'm gonna break down, I'm gonna help you understand what it is I
Order
see
filled.
and what it is I do. Now, for this very first trade, I didn't get the idea to do what you see in later trades. All right, but for this very first trade, I'm going to break it down. Okay? As you can see, I have these yellow lines right here. These are signaled by a swing indicator. All this indicator does with the Renkos based on the strength that I have it, which is 34, is once this low is broken, the next 34 bricks after, if it doesn't close below here or come back below, it'll make another line. It's a higher time frame way of me knowing for certain what are market breaks for external breaks and market breaks for internal breaks. You feel me? It's a way to keep my market structure intact. Now, with a little break to the downside, I was testing something out. That something that I was testing out was market break and retest. Hold on. Okay. I wanted to take and I wanted to practice taking break of structure trades like my mentor do. So now, what you see is I marked up this brick right here, which is the lowest of the lowest brick. If price broke through, it was supposed to be this zone, but price made another one, so I used this zone. Price broke through, retested. Stop loss above this high or this high. 100 ticks is up here. It normally should be up here, where my stop loss should be under the most recent high. You feel me? And then you let it play. Now, in this moment, what I currently have is my ATM strategy. And you see it says new Goldilocks. What that does is 70% of my trade puts me at break even. Now I'm currently trying to move away from this rule simply for the mere fact that the trade normally comes back to break even and stop me out and then goes in my direction. You get me? So look,
Target filled.
it's not one of those situations, but as you can see, it went straight to my take profit. Cool. That's just one trade following market structure, anticipating a break on support. We got that. Let's go to another trade. I have to skip through because some of this stuff was messing up. Now, here is the part that I'm trying to fine tune. When it comes to wrinkles, a lot of these times I will mess up my bias by telling myself, oh, we got back up here. This is market structure shift. You feel me? It is, but I normally just need to wait for a retest or wait for something plausible to happen. So look, I tried to take, what was this? A buy because I realized or I thought price would have bounced off of here, continue shooting up. Watch what happens.
Stop filled.
All right, let's understand what happened. See, currently, if you're looking at my cursor, what happened was external highs were here. These are probably 1 hour highs or 4 hour highs. These are probably 4 hour highs, so these are 1 hour highs. Highs right here were not broken, so I should not have been expecting buys. As a matter of fact, I was supposed to put this box above here on this brick, and if price didn't break that, then we no longer were looking for buys. Now, with this, we have an external low broken. This is a new external low created. 1, 2 rejections. You feel me? Now, when we have this, price, the new highs are supposed to be here. Although these highs weren't broken, these were the new highs. Price broke above this, changing the sell structure. You feel me? So what I was then supposed to do was now either put a box around this brick, which is now the high, and see if price respected either support or the high to then continue my idea of going up. But without that confirmation, I just took a random trade based on an ugly pattern. Feel me? Now we fast forwarded a little bit. Look, price bounced off of these highs. We are now starting to push up. Let's continue. Price now decided to come down and now testing the support instead of the highs. Price did the same thing again, pushed up, came a little bit lower. We're still at the support. Okay, so let me give you a rundown. Price came to the highs, slowed down. Price came again to the support, slowed down. Came, still making lows. So we're not placing any trades until this support is broken, because with this support broken, we can then expect it to go lower. But now look, low here, push up, lower, a higher low. Looks like a one brick, but it's cool. You feel me? Limit order above here, off of support. That is to confirm the W push up. Or if you want to look at it, inverted head and shoulders. Now, the reason why I said this was a great trade, even though I lost up here, was now that this support was created. We had hit something to the left of us that I've seen, but I did not mark out, right? Because I wanted to show you guys that you can do this once you follow market structure. Structure on this pair gold was buy. So I'm looking for areas to buy from. You get me? Okay.
Order
So
filled.
now we take a buy, and now we're going to see stop loss underneath the lows. If it comes to the lows, it wants to continue selling. Cool. But if not, a break above these highs right here confirms another shift. Without breaking the lows, we're not selling. Okay. Now that this is played out, this is basically not an A plus setup. This is an anticipatory setup. What that means is everything right here was for the anticipation of it to go up, right? You find a zone, you like a zone on a higher time frame, you decide it should buy up from here. Cool. Now you need to find confirmations. Confirmation one was 1, 2 taps to this support zone. Push up. This is a higher time frame W, right? Cool. When we made this M pattern, we pushed down, but we stopped at this support that was made. We didn't push through this time, we didn't push through this time, we didn't push through this time, right? So then we pushed up, and when price tried to come down again, it stopped. The reason why I like Rinkos is I don't have to wait for stuff to close. If price don't go down there, if it don't move, it just don't move. See, you guys don't get to sit through the time that it took for all of this to happen. You feel me? Now, I'm making the diagrams or everything for you. Okay, so everything I just explained is what's happening here. Rejections at support, inverted head and shoulders, left shoulder and right shoulder, head right here, A plus double dip entry. Listen, so neckline break. If price was to fail here, we would have just lost the trade. But price pushed up, gave us our take profit, right? Okay. Now, look, possible areas for a retest. Price can come down, reject off of this, but this is the A plus optimal double dip entry. Why? This is an imbalance. What is an imbalance? An area in the market that price has to come back to. It is an area where aggressive price has moved away from and it needs to come back and retest. A lot of people call it supply zones, demand zones. I call them imbalances in this STC setup that we got going on. Right? Now watch how price reacts at these A plus optimal setups.
Filled.
Let's go back to it.
Order submitted.
You place the buy limit on these A plus optimal setups. Stop loss underneath either the support
Order filled.
or for tight entry underneath the imbalance. Look, price immediately rejects. This is back testing. You feel me? This is me back testing January 12th, so just last week. So look, we go to break even, price shoots up, decides it wants to reject. You gotta wait for price to do what it does. It's gonna do some rejecting, but as long as you don't have
Target
the shit
filled.
too filled, you feel me? It's gonna go. Now, this is how you can crab walk the market up. Because look, these are internal highs, these are external highs. These don't matter more than these matter. If we're close to here, we should be able to go through here and come straight back up to here. Price retested the imbalance, made another imbalance right here. If it violently pulls away from that, which it does, right? Comes back to the entry, makes a W pattern, right? I get into the W pattern. Now, my 100 tick stop loss is underneath the imbalance. Realistically, it's supposed to be halfway within to be underneath this W, right? Look, this is a one-to-one. And then I sped it up.
Target filled.
And then on top of that, you see how you can crab walk the market again, where it makes another imbalance for price to then come, retest, to then continue going up, to then break said highs, retest, and keep going. You feel me? Let's go to the full diagram so you can see. Boom. Imbalance area where price needs to come back to. Stop loss placement underneath the box. Lower time frame buy signal, higher time frame buy signal is this W. Imbalance area that needs to be retested. That was also your entry for the bigger W if you didn't catch the lower time frame W. You understand? Rejections on imbalance, higher time frame support. Feel me? That's all that means. That's how you use market structure. You crab walk it up. This is what? One loss, 100 ticks, right? 100, got my 100 ticks back. Got the retest. That's 200, 300 within the same time. You feel me? So that's how simple trading wrinkles is, and I wanted to go and break it down to you so you can kind of understand while I'm back testing, because I have a lot more videos like this. Someone wants me to go and mark up other stuff. I'll do YM, I'll do NQ, I'll try to do Forex pairs, stuff like that, so you guys can see that trading this strategy is a lot more easier than it looks. Thank you. Have a great rest of your day. And remember, subscribe to the YouTube channel.